Hey guys, Don Durrett, Gold Stock Data. I haven't done an optionality video in a while. The last one I did, I think it was July. So this might be the last one because these optionality plays are going to slowly disappear. I've been doing these, I don't know, this is at least my third or fourth. And previously, I mean, we saw quite a few stocks that were extremely cheap that no longer are on this list. For instance, Banyan was valued at $8 an ounce in the ground, and now it's valued, I think, 32, and they didn't make the list. So if I go to Banyan, so these optionality plays can really rip quickly. I mean, Banyan, if we look at the chart on Banyan in July, I think it took off like in July. So here we are. July was at 23 cents. So this is when I was doing all these optionality. It was basically flatline, 20 cents, 23 cents in July and June 19th, June 30th, 25. So in July, it started getting to the 30s and then it took off. So currently, market cap is up to 217 and it was, I think, sub 50. Yeah, it was under 50 million. So now it's trading at $31 an ounce and it was at 8. Um, so these optionality plays can really take off in a hurry. So we're going to do these in groups. I'm going to start. There's one small producer on here, so we'll do that one first. It's Bear Creek, but Bear Creek's really a development play for Karani, but they're a small gold producer, but I have them as silver. Market cap 168 million. Karani has 275 million ounces, was trading at 67 cents. So hopefully they won't sell this for anything. I have it at $4. It'd be almost a four bagger. I don't expect them to be able to finance that capex, about $500 million. So they'll probably end up selling, but they did make I did put them on the list because they are under $1 an ounce in the ground with 250 million ounces. We'll do exploration and then we'll do developers. So these have really shrunk, so there's not that many left. So the ones in the green are the ones that I own. And those are the only ones I'm going to discuss. You could say that the ones in white, I don't particularly like them. So, so if we look at the value, we have both gold and silver. So we're under anything under $30 an ounce. So we're looking, these are all under 25. It looks like 24, and then under 50 cents for silver in the ground. So this is the current market cap per ounce. Um, this is the current market cap. This is the current ounces and estimated future ounces. And then this is the estimated per ounce. I'm just estimating this $150 or $2. And so this is with the 25% dilution, this is the expectation. This is 50% dilution. So we have Teuton here at the top. So Teuton owns 20% of Treaty Creek, which is the Tudor Gold property. And if they get $150 an ounce, it's kind of crazy that Teuton is valued at $10 an ounce in the ground. I didn't double check that one. Um, let's go take a look and make sure that that's right. It doesn't seem right, does it? Teuton. So it's showing 69 million at 57. So let's double check it. 69. I might have a mistake here right off the bat. Teuton. is right. 69. I 69 million. That's right. $10 an ounce in the ground. That's actually correct. So Teuton looks extremely cheap here. Um, Next one is Triumph Gold, another one in Canada, trading at $11 an ounce in the ground. This one is it's very, very cheap. And we have silver dollar at 20 cents an ounce in the ground. Um, it's low grade, but definitely something to take a look at. That's in Mexico. Then we have Free Gold Ventures currently at 29 million ounces. I think they'll get to 30, 35. That's at $16. If they sell for 150, it's looks like a five bagger. This is the only stock that's on my favorites list. I actually think if they did a 50% free carry, I think it's valued as a 15 bagger. Like tomorrow, if Ken Ross called them up and said, we want to buy your project, and they go, well, we'll do a 50% free carry. If that happened, this stock would be a 15 bagger. Now, what I mean by free carry is it wouldn't cost them another penny. Ken Ross would take over the property, develop it, build the mine, and they just collect 50% of the free cash flow. Wouldn't even have to pay for any of the capex. Just here you go. Here it is. It's yours. You can have 50% of it, but you build it. Um, Maple, another one in Canada, trading at $20 an ounce in the ground. They're drilling right now. I think Agnico has a 50% back end, but I think they're going to make it somewhat difficult for Agnico to get that. I think they might be able to keep the whole thing. Getchell, $21 if they grow to 3 million ounces. Both of these, I think Maple will definitely get to two. They probably get more than that. Getchell, Nevada, I think they will grow. Gold Mining Inc. It's hard to say how they're going to actually monetize their properties. They have several of them, but as an optionality play, you're paying $21, which is pretty cheap. Cassiar, I think I think they'll easily get to 2 million. They could get more, so you're paying 24. A lot of these are, how much they're going to dilute us. But if they only dilute us 25%, they could sell it for $150, three bagger. Nothing special. Silver 47, currently 270. This is the one where they just acquired Suma. So they have three properties. They're targeting 1 billion ounces. If they get 350, it's 38 cents in the ground. It's pretty good optionality. And then Moranen, this is in New Zealand. Um, it's low grade, but they have quite a bit of it. So currently at 40 cents. Southern Silver paying 40 cents in the ground for 350 million ounces. I like these two silver optionalities, Moranen and Southern Silver. I also like Kootenay. Um, this Columba project's growing in size. So I'm only valuing it at 300 million because the other properties are kind of low grade, but 45 cents in the ground. And then El Oro, this is kind of a 10 project, but if you only count the silver, it's under 50 cents. So those are the optionality for exploration. And I would take a look at development. And I actually have owned every single one of these. I actually own Spanish Mountain. I recently sold it because it had a 920 million capex. I'm like, that's just too high. They won't be able to finance that. Plus, it's going to take them quite a while before we get to first pour. We're looking at, 2030, 2031. Then Troilus, I did own that one, and I sold that one as well. And I thought they were going to sell it because they had like a 1 billion capex, but they might end up building it. Then Gold Shore, they renamed their company Gold X2. This one, Beaver Creek, I didn't like. what I heard that is they're not going to be able to build this for quite a while. This is another 5, 6 year out before we get to first pour. It's just all three of these were kind of, long term. That's why the reason why I kind of walked. And the International Tower Hill, I was really excited about this stock, but I sold it because they haven't started permitting yet. And I just thought that was ridiculous. I just found out as soon as when I found out they had not started permitting, because it takes a long time to permit these things. They're anticipating when they start permitting, it'll take at least 4 years and $100 million. That's 25 million a year for 4 years with no revenue income. So they'll have to dilute their shares to do it. Plus, you're gonna have to wait. And then after they do the 4 years permitting, then it's going to take them another 2 to 3 years to build it. So you're looking at 7 years before they're in production. So, but all the other ones, I own all these other ones. So if we look at Chesapeake, looks fantastic at this valuation. $10, you're paying $10 an ounce in the ground for Chesapeake right now. And they have, I'm valuing them at 12 million ounces. It's low grade, but they have a bunch of silver to go with it. Altamira, they were a lot of these companies are pivoting from exploration to development. Altamira, they basically, Beaver Creek said they're working on permits right now. They want to start mining. Not a lot, but they want to start small. But if a company starts mining, they're probably going to keep mining, and they have strong insiders. So I'm valuing them at 2 million ounces. They have one. I think they easily find two. They might find three or four. So I'm actually excited about Altamira as well and Chesapeake. Definitely excited about Stellar. I mean, 18 million ounces of gold. If I only value them at 15 million, they're valued at $13 in the ground. Um, that's kind of silly cheap for a developer. So I like Stellar a lot. Sun, they have a big property in Arizona that they recently acquired, but they're not making very much progress. They haven't been drilling very much. Kind of disappointed in their progress. This one's kind of a high risk spec bet. If they build this thing, though, now silver's at almost a 50. If they build it, they have a lot of low grade silver, and it's in Nevada in a good location. So it definitely has some leverage, but it's basically a high risk. Lahontan, um, yeah, this one's puzzling to me. It's $40 million. It was at 28, so it is trending up a little bit, but paying $16 an ounce in the ground, which is kind of silly cheap. I mean, for Nevada, with it's point 0.5 oxides, at least 700, 800,000 ounces. But it just can't seem to get going, if you will. It should be valued at 60, 80 million, I would think. They're going to be construction ready in 26, maybe 27. They need about 2 years. So I think first half of 27 construction ready, but it's remains really cheap. Argent, this is a low grade silver project in Australia. I like the upside here. It's a high risk bet. A lot of these small grade ones, they can have metallurgy issues. They actually call it high grade, and it's like 60 grams. It's like you got to be kidding me. Because it's in Australia and they don't have any silver. Anything over 30 grams is considered high grade in Australia, I guess. But if they get their permit, they get that mine built, it's definitely exciting, I think. You can see why I like to own a lot of stocks with low allocations because some of these stocks could hit, but we don't know which ones. And you definitely don't want to throw high allocations at some of these stocks, like Sun Silver or Argent. Um, Tudor, this was a pleasant surprise at Beaver. They said they were going to pivot to production. We're going to get a PEA next year. And this one turns exciting. So, I mean, we're paying $17 in the ground for a development story with 20 million ounces. I'll take that. Um, Wallbridge. I recently bought this one based on some advice. Somebody told me that they have a new management team because I actually owned it and I sold it and now I'm back in it. I sold it because they just weren't making any progress. But someone told me they have a new management team and things are looking better. So, paying $17 in the ground in Canada for 5 million ounces, I'll take that. P2 Gold, this is another one that I recently bought. They were another one that was an exploration company that pivoted to development. And I found out the CEO, Joe Ovasek, he's now the CEO of Tudor. So I think he might leave P2. I don't know if he's going to do both companies, but he was the old CEO of Pretium, and he's a really good CEO. And I don't think he would have took on the P2 project if it wasn't solid. I think they're 1.5 million. I think they're going to grow to 2.5. Again, in Nevada, paying $18 an ounce in the ground for a development project. That's very cheap. If I can find, potential 10 baggers, I want good ones. I'll take as many as I get my hands on, and we'll see which ones are the winners. Falco, they have a lot of gold, 5 million ounces in Canada. It's been slow progress, but um, I, I, I like it. I think it'll be okay. It's not one of my favorite developments projects in Canada, but I do like it. I think it'll be okay. Unigold, I don't know why I've held on to this stock. They've really had really slow progress. They're sitting on a lot of gold. It's in the Dominican Republic. Uh, which they're increasing their taxes down there, so I'm not excited about it. But if as gold prices go up, this is one of those rising tide stories. So, paying $23 an ounce, it should be $100 an ounce at least for development. These are development plays. They're not exploration. They're getting valued as exploration. Gold Terra, um, this one, it's kind of silly that it's so cheap because it's in it's a past producing mine with high grade. And usually the high grade projects get decent valuations, but Gold Terra hasn't. And so at a certain point, I expect that this is another rising st tide story. Nova Minerals, they have two pretty decent gold projects. They have one flagship project. I think Nova Minerals is going to take a while. This is one of those ones that's going to take a few years, but they just got 40 some odd $1 million check from the government for their antimony deposit, and they're going to be able to use that kind of get their starter mine going. Um, so we'll see what Nova Mineral does, but you're getting a pretty good price here. Scotty is another one that was an exploration company that pivoted to production. Very excited about that. I think it's easily a 2.5 million ounce deposit. Well, they're looking at production in 26, 27. I don't think 26, so like 27. But I think 2.5 million ounces is a good target. They might beat that. So you're paying $26 in Canada, British Columbia. So that one's quite interesting. This is wrong. This should be 4. I don't know if it's 2.5. I think it might be 2.5B, something like that. Save it. But I like the Scotty CEO. I think that he's got a good team, a good board, good plan, and he's been successful. Everything he's done, I think he's going to pull it off. First Mining, we're waiting for them to get their permits. They have two projects. We're getting the second one free, so you're getting a pretty good price here for a pretty good project. Hycroft, a lot of people have basically, poo-pooed this project, saying it's never going to get built, and meanwhile, the market cap keeps going up. We're up to $400 million. It was 150 not that long ago. I like it because they have a lot of gold and silver at low grade, and as the price of gold goes up, at a certain point, it becomes valuable. I don't know when. Is it going to be 4,500? Is it going to be 5,000? Is it going to be 5,500? I don't know, but at a certain gold price, Hycroft's going to be worth some money. Um, a lot of people are going to ignore it. I'm not excited about their current plan. I mean, they've just been drilling. I don't want them to drill. I want them to prepare for higher gold prices. So when they come and they're like ready to build, like they don't even have a PEA right now. So they're not ready. These companies, they all they want to do is present good news to people. So if they throw a PEA out there that shows that the ASIC is $3,600, their share price will go down because nobody believes that gold's going to 5,000. So they won't do a PEA. And so that's the problem. They'll wait until gold is 4,500 or something around there. Then they'll do the PEA. Now I said we don't know what the ASIC is going to come in at. Maybe it comes in at 2,700. But they won't do one. And then the capex might come in at 1 billion, and they don't want to show. And then the IRR, is really really low. They only want to show good news. But if they do it though, they're prepared. They're prepared when the price comes. But these companies won't do that. That's not how they operate. Galleon, I'm not excited about Galleon, but I bought it when it was a lot cheaper. I bought it when it was like $10 an ounce in the ground. Now it's at 30, so it's trending. Um, Heading to 100. That's probably one I'm going to sell fairly early, I think. Paramount Gold Nevada, they're getting ready to get their final permits probably in Q1, and then the sleeper project in Nevada will finally get some drill holes. That project hasn't been drilled in over 10 years, and it's a big property with a lot of gold in Nevada, and we're basically getting that for free. That's why you buy Paramount Gold Nevada for sleeper. Revival, they have three projects to build. Um, this is one of those ones you want to get in early. I mean, you're paying $30 an ounce in the ground right now. This one's probably going to have 50%, but this just shows you that you're getting revival for the free cash flow and the optionality. Horizon Gold, this is one that I recently bought. Hopefully they can expand their resources. I'm only showing them at two. This is a developer in Australia. Um, and so this is one of those ones it's a high risk spec bet. These developers, they don't always hit your number. You get your expectations, but it deserves to be on the list. GR Silver, this is another one that pivoted from exploration to development. We're seeing a lot of that. I'm excited about GR. I think that they have enough gold. They can mine 5-6 million ounces a year, and this one could easily do really well. But on the other side of the coin, we don't have a real strong path for that type of an outcome. They're currently, but it's definitely a high risk spec bet. But I like GR more and more after they pivoted to development. Sonoro. Um, they just expanded the size of their property to 5,000 hectares. They have, they don't have a lot of gold to start, but I think they're easily going to get to 1.5. They might get to 2 million ounces, but they're $50 million market cap. So as long as they don't dilute us too much when they finance that capex, Sonoro I mean, that 50 million, I mean, this thing could easily be a 10 bagger if they can expand production. It's an open pit project. Um, I do like Sonora. I think it does have 10 bagger potential there. Cabral, the, I like the Cabral's property. I think I have it at 2.5 million ounces at $38. I think this thing could easily get to 3 million ounces. It's a good property. A lot of drill targets, both open pit and underground. They have a lot of underground gold that they haven't really fleshed out yet. They have a lot of drilling to do. My worry with Cabral is that G Mining is right next door, and G Mining would love to get their hands on it. So I worry about that. So I also own G Mining just in case, but Cabral is definitely a good story. Next Gold, one of my favorite development stories. Um, it's up to $41 an ounce in the ground, so it's kind of pricey. It's the priciest one on here, but I decided to leave it on the list. Um, I don't know if they'll get beyond 6 million ounces. Both the properties, they might. Um, uh, so it's up to 250 million market cap, but you have two 3 million ounce projects, both of them worth a billion. So you're looking at $2 billion, and it's currently at 250. So the upside is really significant for Next Gold. Goldsboro should be permitted probably in this quarter, Q4, I'm expecting, with construction in Q1. And then they have the Goliath mine, which would be their second one. And then Silver Storm, the San Diego project, we're pretty much getting for free. It has a markup 159, but I think just the mine, I think it's I'm going to guess at the name. I'm going to get it wrong, but they're going into production here in Q4, and then they're going to start drilling the San Diego mine, and that one's pretty interesting. I mean, we're about $1 an ounce. It's not super cheap for optionality, but for free cash flow, it's a lot better. We're just looking at resources in the ground here for optionality. But if you look at a lot of these development stories here, they're worth a lot more when you look at free cash flow. So you want to look at both. For instance, if we look at Silver Storm, it says it's only a three bagger. But if we go here and we look at Silver Storm, you're going to see it a lot higher. So here we have 159, and then San Diego, I have this thing growing to 7 million, but they're only going to be mining 2.5 with their existing project. Well, let's go find the name of it. Mhm. La Perilla. La Perilla. Okay, so it prints as a 14 bagger with free cash flow, but I was only showing optionality as a four bagger, but this is showing potentially a 10 bagger on the resource, but just optionality. The way that I'm doing my spreadsheet, it only shows as like a three bagger. That's if, kind of they sold it. It's like, that's kind of like a minimum price, but it just shows you in the ground. But if you use free cash flow, this is really what you're looking at. Okay, so that's my optionality video. We'll see if we do another one. Like I said, that might be the last one.